There's a simple thing that you can change in how you think about the market, how you think about trading or investing, that is going to have a real positive effect on your performance. Hi, I'm Tyler Ballhorn. This is the Stockscores Market Minutes. And this week, I want to talk a little bit about the simple change in how you think about the market, whether you are a long-term investor or a day trader. And as I said, it's going to have a big impact on your performance. I'll also do my normal market analysis. We'll figure out if the market is strong, weak, if it's going to be weak, is there something that we should be worried about? Look at the areas of the market that are strongest. And then at the end of the video, I'm going to look at the trade of the week, a stock that made a big move on Friday, and how we can identify that stock early and capitalize on the gain. All right, but let's get into this week's topic, and that is how to change your approach to stock trading forever with this simple change of mindset. And that is recognizing that good traders are not trading stocks, they are trading situations. I'll say that again, good traders are not trading stocks, they are trading situations. Now, what do I mean by that? Well, you can have the same stock, watch it all day, all year, all month, whatever, and there will only be certain times when the situation is right to buy that stock. Because it comes down to the reward potential of the trade, the risk of the trade, and the probability of success. Again, we're not trading the stocks. In the long term, very long term, yes, we are investing in good companies and holding them for the long term. But when we are trading and we have a trader mindset, we are really just trading the situation. You can have a good trade on a stock 1 minute, and then a bad trade on that same stock 10 minutes later. I'm going to show you an example now which really emphasizes this. So this is a stock, it's actually unique because it was a stock that made a really good move in the after hour session on Friday. This is CHEK, and this is a relatively low price stock, but it had a really strong move on good volume after hours on Friday. Now, you can see that the stock started the after hour session at about 80 cents, and the highs were $2.46, so about a 300% gain for the stock. Now, what I mean when I say we're trading the situation, not the stock, is this. I want to buy when the reward for risk situation is good. So if I was to buy right here, after it breaks from low volatility, that's one of my strategies actually. You can see there's this little action candle there. That's the pink and yellow dot. I've been talking about that in my videos for a very long time. So that was the first point where there was abnormal activity. If I'm buying here and my support is there, that represents my risk on the trade. So again, buying here, support here, that's my risk on the trade. And you can see that that's about, I don't know, just roughly saying about 15 cents a share. Okay, now, that's not bad. That was a good entry point because that's an abnormal break from low price volatility. Now, a little later in the session, there was this little pullback here and a break of the pullback right there. And that represented an even better setup. Even though you're paying a higher price, the reason is because pullback breaks and upward trends have a little higher probability of success. And my entry is here and my support is there, which means that the risk on the trade was a little less. You can tell that the space was a little less. So there's the entry, there's support, and whereas this one, the entry was there and support is there. So see how that space is bigger? So that means that the risk of the trade was a little higher on the earlier entry than on the second one. And then again, the other important thing is that the probability of success on a pullback break is better than the probability of success on a break from low volatility. We just know this from statistics. Now, if I was thinking about buying the stock here, that's a bad idea because the distance down to support is so wide. Same company, but much higher risk on the trade. Same thing here. If I'm buying here with support down there, look at the risk down to support. Whereas, you know, if it's again, same stock, I'm paying the same price here, basically, and my support is much tighter. So that made this trade better than buying it there. All right, so it's all about offsetting the reward potential of the trade versus the risk of the trade. We call that the risk-reward ratio. And then, of course, the probability of success, which we can determine based on statistics. If you want to learn more about that, go to my website, stockscores.com. I've got courses and lots of things there to talk about that. And while you're at Stockscores, make sure you register for my free weekly email, because I share a lot of these concepts and ideas in there. It's free, and you can register for that on the homepage at stockscores.com. All right, so every week we do, of course, the analysis of the markets. The markets have been really good lately, despite the fact it is September, which is historically a weak month of the year for the market. We had a little bit of weakness, but it's actually been coming back quite nicely. And so let's jump into, well, we'll jump into the Stockscores website. How about that? So this is where you can register for that free weekly letter right there. But what I'm going to do is start with a look at the S&P 500. SPY is the symbol. And you can see that the stock scores are in a good place. We have a sentiment stock score of 76. The stock scores have been above the important 60 point since May, right about in here when we broke this downward trend line and started this nice upward move. Now, therefore, bullish in the short term. If I go to the 3-year weekly chart, I see also the trend is up, so we're bullish there as well. Moving along to the NASDAQ, I was a little concerned about NASDAQ last week because it was underperforming and had been kind of stuck. But this week it managed to break to new highs. So we can get back to having a pretty good stock score and a good chart pattern. So I'm back to bullish on the NASDAQ. What about the small cap market? Well, the small caps have been doing really well since April. The issue, and we have a nice upward trend, so it's bullish in that regard. The only issue I see is on the 3-year chart. We are coming into resistance. This old price peak here from last December is going to be a ceiling. When markets rally into resistance, they usually get stuck at resistance, so we have to worry a little bit about that. Moving along, let's take a look at the Canadian market. T.XIU is the symbol. And there you can see nice upward trend, whether we look at the 1-month intraday chart or the 3-year weekly chart. The trend is up. It's getting a little parabolic. And so you can see it's starting to curve to the upside. That means it's getting risky. And typically when you go parabolic, you usually get a little bit of a correction. There's no sign of one yet, but we want to be watchful of that just because we are getting a parabolic trend. Markets are feeling a little euphoric. One of the reasons the Canadian market is doing so well is strength in the mining sector led by the price of gold. Of course, gold has broken out, so the trend there is up. 3-year chart also nicely up. Here's another example where the trend went a little parabolic. And by parabolic, I mean if I was to draw a linear trend line, when price runs away from that, it usually tries to work its way back to it. So we aren't parabolic now, but on the stock market, on the Canadian market, we are a little bit parabolic. All right, let's look at oil. USO is the symbol, and I'll summarize all these ratings in just a moment, and then we'll look at the trade of the week, of course. USO is oil chart, a little bit of pessimism building. That's negative, more or less sideways on this 8-month chart. And if we look at the 3-year chart, you can see that we have been sideways on oil for 2 years. You know, it gets up to the top of the range, gets stuck, gets down to the bottom of the range and bounces. We're right in the middle of the range right now. So pretty much a neutral chart. All right, let's take a look at currencies. UUP is the US dollar. It's stabilized. You know, we've been moving down, but it's stabilized the last 2.5 months. And so that's better. If we look at the 3-year chart, we can see that stability after a fairly strong sell-off. Now, Bitcoin, GBTC, I was a little worried about it because it had been sort of falling here the last 6 weeks, but this week it made a little bit of a recovery, breaking this short-term downward trend line, so it looks a little better. And if you look at that 3-year chart, we're sort of breaking this pullback this week. So that maybe resolves with the continuation of the upward trend. The one concern I have about Bitcoin is that the pace of the rising tops is not as steep as the pace of the rising bottoms. That's a pattern called a rising wedge. And usually when rising wedges happen, eventually you get a breakdown. But we haven't got the breakdown yet, so we can still be optimistic. But just watch for that. If we get a break of this upward trend line, we're going to have to lower our rating. And of course, I do this video every week, so if you're subscribed to the channel, I'll keep you updated on that. All right, let's take a look at the bond market, which I think is probably the most important chart right now, because we've really seen strength in bonds, which tells us that the market expects that the U.S. Federal Reserve is going to lower interest rates soon. And we're seeing that in that price action. And that's one of the reasons why the small cap market has been doing quite well. So let's look at my ratings then. You see a lot of green there, bullish on all time frames for large cap, NASDAQ, small cap, Canadian stock, gold, neutral on oil, neutral on US dollar, neutral on Bitcoin, but starting to get better on Bitcoin. And then bonds, short term bullish and long-term neutral. All right, now we'll take a look at the trade of the week, another example of how you can think about the risk-reward probability using indicators and looking for abnormal activity, which is my primary focus. And this is a stock that on Friday was quite abnormal, ISPC. It's been a hot stock the last little while. And I've got some lines drawn on here because it represents the reward for risk. And so we kind of alluded to this at the top of the video, but this stock started to trade abnormally around 10 o'clock on Friday, and it had been abnormal a few days earlier as well. And then it goes into a pullback. I don't like to chase strength. One of the reasons is the distance down to support is so far that the risk-reward ratio doesn't make good sense. But here we have a break of the pullback. See this little blue dot there? That's one of the indicators I've created, and it's available to my active trader members at Stockscores.com. It's called a wave up indicator, and it's a good signal that we may be turning on a stock that's generally bullish but has a pullback. We look for that. So that was our entry point at around $1.78 and support down here to say $1.68, $1.65. And you can see that it went for a nice little run. And the thing to measure is the reward for risk lines. So it goes up 1, 2, 3, 4, 5, 6. It hits 7 times risk before it sells off. And so that would be the first trade on ISPC, where it earned 5 or 6 times risk. So if you risk $100, you make $500 or $600. Now, it does it again. It pulls back to the linear trend line, pulls back. Now you see my blue dots firing again. So right in here, there's another entry point, and that goes for another little rip for another 3 or 4 RR. So in this stock, in just a single day, it earned roughly, on 2 trades, roughly 10 times risk. That's your day right there. If you can earn 10 times risk in a week, you can make a lot of money just by putting more and more capital into those trades. But 10 in one day on one stock, that's a great trader. And it was pretty obvious. You just have to know what to look for. If you want to learn more about that, make sure you check out my website, Stockscores.com. Register for that free weekly email. I'm going to have some classes coming up in October that will be free. So if you're registered for the weekly email, then you will get notification of those free classes that are coming up. Hope you've enjoyed this week's video. If so, please click on the like button, subscribe to the channel, and let me know what you think about the markets. Are we due for a correction, or is it still continuing higher? Love to hear your thoughts. Hope you've enjoyed it, and as always, trade well.